Hello friends. In this video, we are going to discuss some of the important changes which has taken place in TDS and TCS law. This new law comes into effect from 1st July 2021. This new TDS and TCS law pertains to TDS and TCS on sale or purchase of goods. So far, TDS and TCS was not applicable on sale of goods. But last year in 2020, a new section 206C 1H was introduced, where it was made mandatory to collect TCS at the time of sale of goods. Now, this year, they have introduced two more new provisions in which the TDS is made applicable on purchase of goods. Also, another new law has been implemented where in the case of non-filers of income tax return, the TDS and TCS rates are double of the normal rates. Now we shall see these provisions in detail. Now before we go into the actual amendments, let us have a quick recap about the purpose of TDS and TCS law in general. TDS refers to tax deducted at source and TCS refers to tax collection at source. I am sure most of you are already aware of that. TDS, for example, is deducted by a person who purchases or incurs expenditure. Suppose a business is paying rent to a landlord. Before paying rent, a TDS is deducted and paid to the government, and this TDS goes to the credit of the landlord's account, that is the recipient's account. So TDS is a tax deduction at source before making any payment for expenses. TCS is just the opposite. When your business makes a sale to somebody and collects money, TCS law states that you have to collect not only the sale proceeds, but you have to collect a little additional amount as TCS and pay this to the government. And this TCS is credited to the account of the person who purchases goods from you, that is our customer. This TCS was so far applicable only on specific goods. Like if you are a car dealer, when you sell high value cars, let us say you are selling a car for 20 lakhs. Then for 20 lakhs, 1% TCS was collected from the person who buys the car, and this amount goes to the government's account into the credit of the PAN of the person buying the car. Now the purpose of TDS and TCS was to bring certain high value transactions into the tax net so that these transactions become trackable and the government is aware of what high value transactions are taking place. This is the background of TDS and TCS law. So today we are going to discuss these two new provisions. We are not discussing all the TDS and TCS laws. We are going to discuss only the specific provisions which have come into effect recently. That is 1st of July 2021. One is changes in the TCS law and another is the new TDS on goods. TDS on goods is governed by section 194Q and TCS on sale of goods is governed by section 206C 1H. Now, who has to follow TDS rules? It is the buyer. The buyer who pays to the supplier before making payment for purchase of goods, he has to deduct TDS. And this TDS goes into the PAN account of the supplier. TCS is to be collected by a business from the sale transactions. In other words, if your company is selling goods to somebody, then you will collect the payment for the sale proceeds. In addition to the sale proceeds, you collect a little additional amount as TCS, and this amount is again deposited into the PAN of the customer who buys goods from you. Now let us study the TCS law first. Before 2020, that is last year, TCS was applicable only for specific transactions like sale of car or sale of timber by government agencies or sale of alcohol, some specific areas like that. It was not applicable for all sales. But in 2020, last year, a new provision was introduced, that is section 206C1H. By this section, any person who sells goods has to collect TCS and pay to the government into the PAN account of the person who buys goods. Now you can see this section. It's a long section. The wordings are complicated. You can always read this bare section from the Income Tax Act. You can Google it or you can just read through this. But let me give you, instead of reading the whole thing, let me convey to you the actual essence of section 206C1H. So the essence of 206C1H, that is TCS law, is like this. I'm not repeating the section, but I'm just conveying the essence. The essence is like this. Every large seller who makes large domestic sales in a year to a single customer who does not deduct TDS shall collect an additional amount as TCS. I can make it even more simpler. Every large seller making a large sale to a single customer in a year has to collect TCS. This essentially means TCS for sale of goods does not apply for all transactions. Let me analyze the situations where TCS on sale of goods applies. First condition is that you are a seller. A buyer doesn't collect TCS, it's a seller. So when you sell goods, you collect the sale proceeds, along with that you collect TCS. But all sellers need not collect TCS, only large sellers have to collect TCS. So are you a large seller? That's the first question. You are a large seller liable to collect TCS if your turnover in the preceding year was more than 10 crore. If yours is a new business, you have just started the business and last year there was no sale, or last year your sale was very less, maybe 2 crores or 3 crores, then you don't come under this ambit of TCS on sale of goods. Again, once you have to collect TCS, you did not collect TCS on all sales. Suppose you sell a small amount of goods to a walk-in customer, you don't have to collect TCS along with that. You have to collect TCS only from your large customers with whom you have done large business. So what does this mean? It means if you have sold goods for more than 50 lakhs in a year to a single customer, then from that customer you collect TCS. You collect TCS, that too only on the amount exceeding 50 lakhs. Suppose you have made a sale of 50 lakhs, or let us say you have made a sale of 55 lakhs. On the first 50 lakhs, you need not collect TCS. On the balance 5 lakhs, you collect TCS. And thereafter, suppose you make a sale of 3 lakhs, then you have to collect TCS on the entire 3 lakhs because you have exhausted the 50 lakhs limit for that customer for that year. Sometimes the customer may have to deduct TDS under the new provisions of 194Q while making payment to you for the purchase of goods. So you are selling goods to a large customer who deducts TDS as per the new law. In that case, you need not collect TCS. His deduction of TDS is sufficient. Now, having understood that you have to collect TCS, next question is how much TCS we have to collect. What is the rate? Here, there are 3 rates applicable. The first is the default rate. The default rate is 0.1% of the sale proceeds. So if you are selling goods worth 1 lakh, you have to collect 100 rupees. But if that particular person is not having a PAN, he doesn't give you a valid PAN, you don't know who he is, then that rate becomes 5%. In which case, if you are selling a goods of 1 lakh worth of goods to a particular customer, then the TCS rate is 5%. So you have to collect 1 lakh 5,000 from him, 5,000 you deposit as TCS to the government. But suppose he has a valid PAN, but he is non-filer. Who is a non-filer? I will explain shortly. But he is a person who has a PAN and he does not file his returns regularly, in which case the TCS rate becomes 1% instead of 0.1%. So it is 0.1% for default, it is 5% if that person does not have a PAN, and it is 1% if he has a PAN but is a non-filer. After collecting TCS, you have to deposit this TCS into the government account and file TCS returns and issue TCS certificate to the customer. Now we will go to the next topic, that is TDS on purchase of goods under section 194Q. This is a new law which was introduced by the Finance Act 2021 and is applicable for all transactions from 1st of July 2021. This is TDS on purchase of goods. So far, we have been used to TDS only on expenses. Like when you pay rent, you deduct TDS and pay only the balance amount to the landlord. Similarly, you may be paying contract payments, or there may be commission payments or interest payments. All these service charges were subject to TDS. TDS was not applicable so far on purchase of goods like raw materials and trading goods. With this new provision 194Q, all purchases have also been included within the ambit of TDS under section 194Q. Now let us see what 194Q tells us. You can see this section 194Q, the bare section. It's quite lengthy. You are able to see in this video. You can always Google and look for a bare act under 194Q. But let me summarize the essence of 194Q for easy understanding in a layman language. According to 194Q, a large buyer who purchases large volume of goods from a single supplier shall deduct TDS at 0.1%. So you understand, it should be a large buyer. If your company is a large buyer, who is a large buyer? If your business is big, that means in the previous year, preceding the current year when this transaction is taking place, your turnover was 10 crore and above. Then you become a large business person. If you are a large buyer and you are making purchases from a single person for a sum exceeding 50 lakhs. Now, whether that supplier is a large person or not doesn't matter. Whether your transaction with that person exceeded 50 lakhs or not is the deciding factor. If you are a large buyer, that is your turnover last year is more than 10 crores, and you have purchased goods for 50 lakhs and above, then from 1/7/2001, you have to deduct TDS at the rate of 0.1% and pay the balance amount only to the supplier. This is the essence of 194Q. Now, let us understand the law step by step. Now, this section applies first only if you are a buyer. TDS does not apply on sellers. For sellers, we have TCS, which we discussed earlier. And you are a buyer and your turnover during the preceding year is more than 10 crores. And you are purchasing goods for more than 50 lakhs during the current year from a single buyer. Now here goods means the goods which you are purchasing for resale or raw materials, or it can even be capital goods. Suppose you are a large person, your turnover last year was 10 crore. You are purchasing, let us say, a machinery for your factory from a particular supplier. And that machinery, you're not selling, you're not a trader in machinery, you're buying that machinery to use it in your factory. And that machine is 1 crore. Then that also is covered under TDS. And TDS is to be deducted only on the sum exceeding 50 lakhs which you make during the year. And TDS is applicable only for transactions after 1/7/2021, that is 1st July 21. Here again, there are 3 TDS rates. The first is your supplier. The default rate is 0.1%. If that supplier does not have a PAN or he does not give you his PAN number, most of the cases it will not happen nowadays. But suppose you are buying something for more than 50 lakhs from a person who does not have a PAN, then the TDS rate is 5%. And if he has a PAN, but he is a non-filer, that is, he has not been filing his returns regularly, then the TDS rate is 1%. Now, the important thing to note here is TDS is based upon the credit, date of credit or date of payment, whichever is earlier. So, suppose you have made a payment on July 15th as an advance and the goods are received after 2 months. Then TDS has to be deducted at the time of payment, that is now itself. But suppose you are getting the goods now and you are crediting that supplier in your books, but you are making payment after 3 months, then also TDS has to be deducted now. So it is either payment or credit, whichever is earlier. And again, TDS is to be deducted on the basic cost of the goods, excluding GST. So suppose you are purchasing goods for 1 crore plus there is a GST of 18 lakhs. So totally you will be paying 1 crore 18 lakhs. TDS has to be deducted only on 1 crore and not on 18 lakhs. Another point to note is, in case of purchase returns, that is, you have purchased some item, deducted TDS and paid it to the government, and then you don't like the commodity, you don't like the goods, you return the goods and he refunds you the money. In which case, you may amend the TDS return and exclude it. Otherwise, there will be a loss because he is going to pay only the net amount which you already paid to him, and the TDS you have already paid to the government. So you can amend it and take back a refund. I just explained to you about the TDS and TCS rates, where we saw that there are 3 rates. The default rate of 0.1% on TDS or TCS, and a default rate of 5% in case the customer or the supplier does not have a PAN. And a third new section which says if the customer or the supplier is having a PAN but he is non-filer, then the TDS or TCS rate is 1% instead of 0.1%. This new law has been has become effective from 1st July 2021. This is by means of 2 new sections in the Income Tax Act, that is 206AB and 206CCA. These 2 new sections have been imposed because normally TDS and TCS rates are very low. It is generally on goods and services, it is 0.1%. But when the profits earned by that supplier or the customer is very high, then there is a tendency for these persons not to file the returns. Because if they file the returns, then they will have to pay additional taxes over and above the TDS or TCS which is available in their account. To make them, to motivate them and to force them, to push them to file their returns, these 2 new sections have been implemented, have been enacted. Accordingly, when the customer or the supplier has not filed his returns regularly, that is, if he is considered as a non-filer, the word non-filer is not used in the Act, they say specified person, but in effect it talks about non-filers. Such non-filers are subject to TDS or TCS at the rate of 1% instead of 0.1%. So the TDS is basically 10 times. So suppose you are selling goods for 1 crore and the customer is having PAN but he is not filing his returns. Then the TCS for 1 crore would have been 10,000 rupees. It is 0.1%. But for the same 1 crore, now it is 1%, that is 1 lakh. And same way, if you are purchasing goods for more than 1 crore from a particular supplier, TDS is 0.1%, that is 10,000 rupees, but it becomes 1 lakh if that supplier has not filed his income tax returns for last 2 years. That is if he is a non-filer. Now let us understand who is a non-filer, who is subject to TDS or TCS at 1%. Under 206AB, read with 206AA, it requires a buyer to deduct TDS if the seller is a non-filer, and under 206CCA, a seller has to collect TCS at a higher rate of 1% if the customer is a non-filer. A non-filer is a seller or a buyer who is resident in India but who has not filed his income tax returns for the 2 years preceding the year in which this transaction is taking place. So now we are in 21-22. So 2 years, today there is a transaction, and last 2 years, that is for the financial year 2021 and for the financial year 1920, 2 years preceding the current year, if he has not filed his returns, then the next thing is whether the total TDS or TCS enjoyed by him in those 2 years are 50,000 or more. If both these things are correct, then he becomes a defaulter or a non-filer. So if his 2 years returns have not been filed and he is a person who is subject to large TDS or TCS, he has TDS or TCS in his 26AS credit for more than 50,000, then he becomes a non-filer, and transactions with such non-filers are subject to TDS and TCS at 1%. But here there is a small thing which we have to note. For financial year 21, year ending 31/3/21, the due date of filing of returns is not yet over. We have time till September, in which case that year is not considered as a non-filer. Then he is a non-filer only for 1 year, that is 31/3/20, in which case 2 years he is not a non-filer, so you can continue the default rate. Now let me give you a synopsis of the TDS and TCS law pertaining to sale or purchase of goods. Let me summarize it. TDS applies on your purchase transaction if you are a buyer, and TCS applies on your sale transaction if you are a seller. Both TDS and TCS applies on purchase or sale of goods, and it will apply only if you are a large turnover person, a huge turnover person. That is, if your turnover in the preceding financial year is 10 crores or more. Then again, if you are a large turnover person, that is your turnover is more than 10 crore, TDS and TCS will not apply unless your transaction with your supplier or your customer is of high value. That is, your transaction with that supplier is more than 50 lakhs. So if you are a large turnover company and to a particular customer you are selling goods for more than 50 lakhs during the financial year, then you have to collect TCS, or you are purchasing goods for more than 50 lakhs during the financial year in the aggregate from a single supplier, then you have to deduct TDS before making payment to the supplier. So all you have to do is keep track. Once you decide that you are a large turnover person, then you have to keep track of your customer and supplier. If you are making large volume of sales to a particular customer, then you have to collect TCS. If you are making large volume of purchases from a particular supplier, you have to deduct TDS. Now, it doesn't matter whether that company, your customer or supplier, is having a high turnover or not. What matters is whether your turnover is more than 10 crores in the preceding year and whether your transaction with that particular single supplier or customer is more than 50 lakhs during the current year. And if you are a person liable to collect TCS or deduct TCS, in that transaction, the amount of TDS or TCS is depending upon the status of that person. The default rate is 0.1%. If he does not give PAN, the TDS rate is 5%. If he gives PAN, but he is a non-filer, then it is 1%. Now, in some cases, it is possible that you are a large turnover person. Your customer or supplier is also a large turnover person. His turnover is also more than 10 crore. Then, if you are making a sale, large volume of sales, let us say you are selling goods for 1 crore. Now, as per TCS law, you have to collect TCS and pay to his credit. And as per TDS law 194Q, your customer, before making payment to you, will have to deduct TDS. So, which means there is tax has to be paid 2 times. Of course, it is to different PANs. But to avoid the hardship, it is mentioned in the Act that only TDS under 194Q takes priority, is mandatory. So, if you are selling goods and your customer deducts TDS from the payment made to you, then you don't have to collect TCS on that sale. Suppose he does not deduct TDS, then you have to collect TCS from that particular customer. Okay, now we have seen the TDS and TCS law as it is. Now let us see how this impacts various industries and how it impacts various transactions. Let us take the case of a jewelry industry. So I'll take a sample. I am taking an example of Raj Jewelry Company. Raj Jewelry Company is a jewelry manufacturer whose turnover during 2021 is 15 crores. And this company is engaged in purchase of manufacture of jewelry. It is also trading. It buys gold bullion, partly sells it and partly uses it for its own manufacture of jewelry. And after manufacturing jewelry, it sells these manufactured jewelry to other wholesale dealers or retail shops. And in some cases, it also purchases ready-made jewelry from other suppliers and sells it to its customers. This is the background. So, Raj Jewelry Company purchases gold bullion and jewelry. It sells gold bullion and jewelry. Now, let us see the implications and the applicability of TCS under section 206C1H and TDS under 194Q. Let me take the first scenario. The first scenario is Raj Jewelry Company purchases jewelry from ABC Bullion. On 15th April, it purchases 10 lakhs worth of goods, excluding GST. On 15th July, it is purchasing for 70 lakhs and on 15th August, it is purchasing for 5 lakhs. Now comes the questions. Does Raj Jewelry Company need to deduct TDS or collect TCS? TDS, yes, because it has got a turnover of more than 15 crores, more than 10 crores. Its turnover last year was 15 crores. So TDS applies. TCS does not apply because here Raj Jewelry is a buyer. It is not a seller and TCS applies only on sale transactions. The next question. The first transaction of 10 lakhs on 15th April, does it attract TDS? No, because TDS is applicable only from 1st July and this was purchased on 15th April. And secondly, the transaction was even otherwise only 10 lakhs and up to the first 50 lakhs, there is no TDS. The third question, the second transaction of 70 lakhs purchased on 15th July. Does TDS apply? Yes, TDS applies because this purchase was made after 1st of July and the total transaction value with ABC is more than 50 lakhs. That is, totally it is 80 lakhs. 10 lakhs in April and 70 lakhs in July. So TDS definitely applies. On what amount TDS has to be deducted? No TDS is applicable for the first 50 lakhs worth of transactions during the financial year. Now during the financial year, there have been two transactions, first 10 lakhs and then 70 lakhs, totally 80 lakhs. Out of this 80 lakhs, first 50 lakhs, there is no TDS and the balance 30 lakhs attracts TDS. So on the 70 lakhs second transaction, 40 lakhs is exempt and 30 lakhs becomes subject to TDS. Now what is the TDS percentage is the next question. For this, we have to first ask Raj Jewelry to request the customer, the supplier ABC, to give their PAN number. It should verify whether the PAN is valid or not, whether it pertains to ABC or not. And then Raj has to check whether ABC is a non-filer or not. If ABC does not have PAN, then the TDS is 5%. If ABC has a PAN and it is regularly filing, then it is 0.1%. And if ABC has PAN but it is a non-filer, then it is 1%. Now, there is a third transaction of 5 lakhs. Whether this is subject to TDS? Definitely yes, because it has already exhausted the 50 lakhs limit for the year. Raj is already a large turnover company and more than 50 lakhs, there is a business transaction. Therefore, this 5 lakhs is entirely subject to TDS. Now, let us take a scenario when ABC Bullion comes and tells Raj, look, I am collecting TCS, so please don't deduct TDS. Can Raj say, okay, I will not deduct TDS? The answer is no, because 194Q, the TDS is mandatory and it takes priority over TCS. Of course, TDS and TCS both do not apply on the same transaction, but TDS is mandatory. So even if ABC requests Raj saying that you don't deduct TDS, I will collect TCS, Raj should not agree. But if by chance, if TCS has already been included in the invoice and TCS already been paid by the supplier, then there is an option that there is no double taxation and Raj can forego. But the prime responsibility is of Raj to deduct TDS. This is the first scenario. Now let us take a second scenario for same TDS. Raj Jewelry purchases jewelry from ABC. On 15th April, it has purchased 10 lakhs excluding GST. On 15th July, it has made an advance of 80 lakhs along with a purchase order. And 15th September, against this purchase order and advance, goods are received with an invoice. So, if you see, on 15th July, an advance was paid, goods were not received. And on 15th September, goods are received with invoice. So, the actual purchase takes place in September, but payment has been made in July. Now, the question is, does Raj need to deduct TDS? Yes, obviously. on the second transaction of 80 lakhs advance payment, does the company have to make, Raj has to make TDS? Yes, because TDS applies on payment to the supplier or credit on account of purchase, whichever is earlier. So here, payment has been made before purchase. Therefore, at the time of payment itself, TDS has to be deducted. That is in July. And on what amount TDS has to be deducted in July? No TDS on the first 50 lakhs, we have already discussed that. And 10 lakhs is already exhausted without TDS. Another 40 lakhs, there is no need of TDS. So on this 80 lakhs, after deducting the balance 40 lakhs, TDS has to be deducted only on 40 lakhs. On the third transaction of actual purchase of goods in September, again, do we need to deduct TDS? The answer is no. Since TDS on 80 lakhs has already been made at the time of advance payment, this time it's only a purchase or with an invoice and delivery. TDS again need not be done. But on the other hand, if the purchase against that advance was for 90 lakhs, for 80 lakhs, you have already deducted TDS on the payment basis. On the balance 10 lakhs, we have to deduct now. Now, ABC Bullion says, don't deduct TDS because ABC says, my turnover is only 5 crores. It doesn't matter. What matters is whether your company, Raj Jewelry Company's turnover is more than 10 crores or not. Seller's transaction with this particular Raj is more than 50 lakhs. That is all is required. So your seller or customer's turnover is not important. Now let us take another scenario, scenario 3 for the same Raj. Now Raj Jewelry Company purchases jewelry from ABC as follows. It makes an advance of 80 lakhs with purchase order in June itself. Before, see, TDS, TCS, the new law comes on effect from 1st of July. On 30th June, an advance has been made. Payment of 80 lakhs has been made with purchase order. On 3rd July, goods are received. Now we have a situation where payment has been made before 1st July. Invoice and goods have been received after July. Whether TDS has to be deducted or not. TDS on second transaction, that is goods received with invoice on 3rd of July, does not attract TDS because TDS has to be made at the time of payment or credit, whichever is earlier. And the earlier means the first one is advance payment has been made in June, 30th June. So on 30th June, this new law was not there. Therefore, the second transaction does not attract TDS. Now we'll go to a scenario 4. Raj Jewelry Company purchases jewelry from ABC Bullion. On 30th June, goods are received with invoice for 80 lakhs. 30th June, before this new law, goods have been received. On 3rd July, payment for this purchase is made for 80 lakhs. And on 15th July, another invoice for 10 lakhs has been received. Now, what is the situation? On 30th June, when goods were received, there is no TDS 194Q was not applicable. Therefore, no TDS. And when the payment is made in 3rd July, it has already been incurred on 30th June. And since TDS applies on actual purchase or payment, whichever is earlier, the earlier was 30th June. So this payment does not attract TDS. And on the subsequent transaction on 15th July, 194Q is applicable. So therefore, TDS has to be deducted only on 10 lakhs. Now the fact that the goods were purchased for 80 lakhs before June and paid after July is not considered because that is outside the purview of TDS. So only 10 lakhs is subject to TDS. Now let us take another scenario. This time we'll take for TCS. The same company, Raj Jewelry Company, who has a turnover of 15 crores last year. is now a seller of goods. It sells jewelry to Bombay Jewelry Mart. On 15th April, it sells goods for 20 lakhs, excluding GST. On 15th July, it sells goods for 70 lakhs, excluding GST. And on 15th August, it sells for another 5 lakhs, excluding GST. Now, what is the situation? Does Raj need to deduct TDS or TCS? TDS does not apply because in this transaction, Raj is a seller. TCS applies because he is a large seller. But on the first transaction of 20 lakhs, TCS does not apply because there is no TCS on the first 50 lakhs. And here there is only 20 lakhs. And that too before 1st July. That is, whether TCS on the second transaction of rupees 70 lakhs applies. Yes, sales after 1st July is subject to TCS. And now there is already a transaction of 90 lakhs that is already sold for 20 lakhs and now there is 70 lakhs. Totally it is 90 lakhs. On 90 lakhs, the first 50 lakhs, there is no TCS and therefore for the balance 40 lakhs, there is TCS. So, on what amount? The TCS has to be collected on 40 lakhs. Now, on what amount should this TCS be collected? Whether TCS is to be collected, that is, that percentage has to be collected on the amount including GST or excluding GST. Here, we have to note that in the case of TDS under 194Q, TDS is to be deducted only on the basic cost, excluding GST. But TCS is applicable on collection basis. Therefore, here TCS applies on the basic cost plus GST. So here 40 lakhs GST, 40 lakhs cost plus GST is the value on which TCS is to be collected. And what is the percentage on which TCS has to be collected? Question 5. What is the TCS percentage? Is first, Raj should ask its customer Bombay Jewelry's PAN number and verify the PAN number if the PAN is correct or not. Then it also has to check whether Bombay Jewelry Mart's PAN is a regular filer or not. If PAN is valid and Bombay Jewelry is filing its returns regularly, then it is 0.1% TCS. If PAN is valid but it's a non-filer, then it is 1%. And if Bombay Jewelry does not give a valid PAN, then it is 5%. And on the question 6, on the third transaction of 5 lakhs, whether TCS applies? Yes, because Raj is already a big businessman. His turnover is more than 10 crore. Its transaction with Bombay is more than 50 lakhs. It has exhausted the basic threshold of 50 lakhs. Therefore, on this 5 lakhs, TCS has to be collected on the full amount of 5 lakhs plus GST. Bombay Jewelry Mart says it will deduct TDS. And so it's asking Raj not to collect TCS. Yes, the customer is right. If Bombay Jewelry Mart is deducting TDS, TDS takes priority. Therefore, Raj need not collect TCS. Now we have so far considered the various scenarios in a jewelry industry. This applies for all industries. I have just taken jewelry as an example. Now let us take how this TDS and TCS impacts other industries. Let us take the case of a petrol bunk, petrol retail outlet. Raj Petrol Bunk is a retail outlet of Indian Oil Corporation. Raj Petrol Bunk has a turnover of 9 crores in the preceding year. And Raj Petrol Bunk purchases 70 lakhs worth of petrol from Indian Oil Corporation every month. Now, for the month of July and August 2021, it is purchasing 70 lakhs every month. Before making payment to Indian Oil Corporation, does Raj need to deduct TDS from its payment? Here, Raj Petrol Bunk is not a large buyer because its turnover is only 9 crores in the preceding year. Therefore, TDS under 194Q does not apply to Raj Petrol Bunk. So Raj can make payments to Indian Oil without deducting TDS. But Indian Oil Corporation is a large seller, and the transaction with Indian Oil and Raj is definitely more than 50 lakhs per annum. Therefore, Indian Oil Corporation, whenever it raises an invoice for the load which it sends to the bank, it will add TCS, and Raj has to pay to the Indian Oil Bank, to the Indian Oil Corporation, the cost of petrol plus TCS. Now, in the current financial year, if Raj Petrol Bunks crosses a turnover of 10 crore, then next year, Raj becomes a large buyer. So, now both Raj Petrol Bunk as well as Indian Oil Corporation are both large businessmen, and both are subject to TDS and TCS. Raj has to deduct TCS, Indian Oil has to collect TCS. Now, which takes priority? Raj has to deduct TDS and pay it to, after deducting, pay it to the government, in which case the credit of this TDS will go to Indian Oil's PAN number, and Indian Oil will stop collecting TCS. Now let me take the case of a builder or a construction contractor. Raj Constructions is a builder. Their turnover in the preceding year is 15 crores. It purchases steel, cement from ABC Hardwares for 75 lakhs in July 21. Now here Raj Constructions turnover is more than 10 crore in the preceding year. So it is subject to TDS. So it has to deduct TDS under section 194Q on all purchases of goods from large suppliers. Now if Raj Construction purchases even equipments, like it purchases a large earth moving equipment, or it purchases a tanker, or it purchases something for more than 50 lakhs from a particular supplier, even that is subject to TDS. But Raj Construction does not collect TCS from its customers, because what Raj does is not sale of goods. TCS under 206C1H applies only to sale of goods and not sale of services. So when it constructs, it's a contractor, it does not collect TCS. Now let us take another common scenario, TDS and TCS for wholesalers and retailers of goods. You have hundreds of large business houses who are wholesalers and retailers. Example, distributors of consumer goods, distributors of FMCG goods. What is the applicability of TDS and TCS on such people? Let us take the case of Raj Enterprises, who is a wholesale distributor of TV, washing machines, and other consumer products. It has a turnover of 15 crores in the preceding year, and it purchases goods from large corporates like Sony, Samsung, and it sells these goods to large retail showrooms. Now here Raj Enterprises is covered under TDS as well as TCS law, because its turnover is more than 10 crore in the preceding year. While making payment to Sony or Samsung for its purchases, Raj Enterprises has to deduct TDS while making payments. At the same time, since Raj Enterprises is a wholesaler, if it sells huge stocks to retail outlets, whenever a particular customer retail outlet purchases more than 50 lakhs worth of goods from Raj, it has to collect TCS also. Thus, if some of these showrooms have large turnover, they will, if suppose these customers deduct TDS from Raj, then it doesn't have to collect TCS again. Now, I have tried to make this TDS TCS law as simple as possible by explaining various scenarios in a layman's language. Now, this video is not meant to be a substitute for professional advice. Viewers are requested to take professional advice from their consultant before implementing this TDS TCS law in their own business.
Come to Accopedia, School of Accounting and Finance, where you get trained in accounting, finance, and taxation by practicing chartered accountants. For more details, please visit accopedia.com.